we're going to be showing you the Wall Street Genius, how we can use it to make some trades. We're using the replay. This is a practice tool, and we're going to be able to show you a bunch of different trades and how much money you could have made on them. So take it away, Alan.
Okay, thanks. And we got a guest with us today, so that's all good. And what we're going to do is we just picked the current day, and that you can, there's, as the future moves on, that day will be there with 1,000 others. So we already loaded the day, and we're looking at the system here. This is the main chart. It's got the reduced list of stocks, and this is where we want people to start learning how to use the system. And some people will want to stay in this environment, but other people will want to branch out to, a list that's got all kinds of stuff. And we've got, a few different lists that are targeted at specific strategies. And so we're not going to get into all that. My point is that you've got a lot of room that if you want to grow and get better in a certain thing that suits your style, there's room for you to do that. But the place to start is here. And so there's fewer stocks, fewer columns. And so here on this day, what we're looking at is it's telling us that we should be looking at Amazon for a red move. That's what the R is here.
In other words, going down.
Going down, yeah, and you're going to make money going down if you're buying a put option. And or if there's something that shows up, because we're not making the market do anything, we can't. What we do is we wait for the market to come to us and say, hey, you know what, I'm trending green right now, moving up. So if you're pre-selected as a good probability. So these few that are marked green are the ones we want to look for a green move. And this one here I've added. I don't need to have that on there. That's a small cap. I had a conversation with some other people and I wrote a blog about that, so I'm just going to take that one off for now. But these ones are the ones we want to watch today in our replay practice session. So it's 9:31. The market's been open for 1 minute. That's what these stocks have done. At this point, it's a little too early to get into anything. So I'm just going to move forward a couple minutes and just to see what the market is doing and to see what I want to do. So right now I don't know how the basket is doing. The basket is our list of stocks that has a few important indexes that give us a flavor for what the whole market is doing. It makes no sense to fight the market, ever. So there may be a few times that there's some opportunities, but that's not where you want to be. You want to be where the probabilities are. So I'm just going to add here, and there's an option here that says show comparison. So it's drawing a line on the chart, and you can see it says compare with SPY. So SPY is 500 stocks. So right now SPY is moved up a little bit and heading down. So you can see also here where it says 26 red, it says that most of the stocks that we've been that are being carried here, not that we're looking at the whole pile, are heading red. So although this stock has got that G here, that's a carryover on that list. See, like if I click on Baidu, it says G up here. If I click on Amazon, it's got red here, and it's telling me I should be looking for a red move. Well, right now the market, and it's early in the day, market's heading a bit red. So this is not yet a setup for red. What we're just looking for is a red move. So how's this one? This one's looking better, and you can see that this one's been moving down a bit. Looks like it had a split just a few days ago, but this one looks like we might be interested in a red move, and it's already told us that red might be a good thing. So it's getting ready to go for a red move, and the market is going that way. I don't like to get into a trade before 9:36. That's me. I like a little bit more stability. The first half hour of the market can be pretty volatile. You can also make a lot of money, but it takes a little bit of getting used to. So what we're going to do is we're just going to move forward 1 more minute. Now it's 9:35, and it's like, well, this thing, it didn't continue on red. It says that red background there says that this is trending red. It's getting ready to do something. That's an alert, but that's not a go do something. So let's go look at some of these other ones and see if they're ready to do something. So here, Netflix is looking pretty good for going red. We're a little late in the move because you wanted the first signal, but that's too early in the day. So we're just going to go forward another minute here and see if there's something we can grab. That's heading red because the market is moving red. We can see that. Now this stock here, SCTY, is positioned. That's what this bottom half of the chart is it's telling us that this one's in a great position for a red move today. So if this thing goes red, I really want to know about it. And it's going to be something where if it breaks below these lines, that's where I would want to get into a trade on that. So that one's not quite ready.
That line is a 20-day break below.
Yes.
So in other words, if it breaks below it, it's been 20 days since it's that low.
Yeah.
And sometimes what happens is that becomes a support line. Sometimes it breaks below it, becomes a resistance line, or vice versa. Or if it breaks through, it could go into free fall. And that's why we pay attention, as opposed to if it's a long ways away from it.
And here I just brought up the daily chart, and but you don't need them. You certainly don't want to look at that stuff when you're beginning. But you can see that, you know, when it gets down in this price months ago, it like had support, which means that people thought the stock was cheap and they were buying it, right? So, but right now they've been selling it hard. So something's going on. I don't need to know what everything's going on. I just need to know that I can make a little bit money on the red side today. If it breaks below this price down here, it could be some good money. So we're gonna just keep our eye on that one, and that's why it's on the list, is it does that for you. So Netflix is in a nice position. This one's going to probably be a short run, and that again is just a little bit of training that we give you. Is you see where this is on the bottom part. Netflix isn't at the bottom; it's in between, which means that it's likely to run down for a little bit and then bounce up or bounce around before it keeps going down. So it's not as good a trade, but it's okay. So of these ones here, you know, see, I'm picky. I don't like just getting any old trade to make a few bucks. I want like a really good trade. So, and this is part of our training is that if once you get good at it, you can go grab the ones that are little trades and, you know, make, you know, small profits here and there and all over the place. But if you want to, you just begin with the easy ones. So I'm looking for a red stock on a red market, and hopefully it's down near the bottom here. So
Alan, are you sharing a screen right now? Because I just lost it.
Oh, okay. Looks like I am. Let me just go turn it on again. Did it come back?
Nope. Now it's come back.
Okay. So here we go.
There we go.
Got. Let me just grab something here. Okay. So. Here we go. So here we are. I'm kind of liking CLR. It's looking in a pretty good position. It's got good volume. If it's got big volume, the candles are wide, and there's features that tell you that. Here we go. Gotta click on the right window. I make it this color, this fuchsia, just so that it's obvious for me. That's got exceptionally high volume. And the computer does all that math for us. It says that for this moment, for this stock, that's exceptional volume. So it's not average. It's way beyond average.
And
so
it's not what the volume is.
Yes.
It's
right.
exceptional volume. So in other words, this is more volume than normal. So people are paying attention. They're doing something, and we tend to talk about tides coming in and waves coming in. So it's like a powerful wave coming in. Do you want to surf the little piddly wave, or do you want to surf the nice big one?
Exactly. So that's what we're looking at, is we're seeing that this thing's moving pretty good in the red direction. So if it breaks this this tinted orangey area, we call that the risk zone, and also breaks this early down, I would be very interested in buying that. So let's just focus on one thing for a moment and just see what happens with this thing. It didn't break it. It bounced off. I'm just moving forward in time here. I have a new signal, a fresh signal. That's very important to us. And this is looking like a decent trade right now. And but again, it's patience. I'm waiting for this thing to break it. So let's see what happens here. I'm getting ready to hit the buy button for a put. And a put is how I make money on the way down. So this is for practice. It tells you all the neat stuff that you need to know. So I'm going to go forward one little bit and see what it does. Still hasn't broken it. So I didn't get in. That's the business of patience. It pays off because I'm not looking for weak moves that haven't proved themselves. I want the move to tell me that you're a good move. Now we're just focusing on one stock and we're doing it high speed. So here it is again. This is the perfect setup again. It's right near the edge of the risk zone. It's a fresh move. It's at just after 10 o'clock, and we talk about that in some detail, is that there's reversal times in the market where it just does this stuff. This is how it is that this is now looking like a perfect trade for me. This market is a little bit on the green side, but not bad. It's not fighting me. So if this thing goes much lower, I'll buy the put. So I'm going to go forward 1 minute. Now you can have this program go forward at 10 seconds is 10 seconds. And I can go hit the play button. So we're going to go do that. And then we'll just do that for a few seconds to see what it does. But if it breaks, I'm going to go hit this buy button, which is, you would normally go to your broker and go place the order for the option. But this is just showing you how this is very much like the live market. It's a little less fluttery than the live market. Will flutter a little bit here and there in the middle, which is good for training because you don't want to be distracted by all that micro stuff. Doesn't matter. But I'm just waiting for this thing to break, and if it breaks now or in the next minute or two, I'm going to be buying that put. So you can see it's got a little warning sign up here, and that tells me, if you hover over it the mouse, it'll tell you that the market is going the other way. But this is a week going the other way. Now the market seems to be going a bit red. So it's not fighting me. Anyways, I've had enough of the real time. I'm going to tell it to go forward 1 minute. Okay, that's 1 minute. Now another minute. And I'm going to hide this thing. And I want to see how this candle goes. If this candle goes lower than that candle by 5 cents, which, I'm in. Well, it didn't do it. There it did it. And this could still be a great trade. If you're a cautious trader, I wouldn't get it. But if you had a bit of experience, you go, I've got great volume. The market is now strong, not super strong, but strongly going red. This was one of my ideal stocks for going red. Everything's looking good here. It's not perfect, but it's looking good. And you can see this is the low of the day, and it's just breaking the put-only zone. So I'm just going to, yeah, I'm liking it. I'm going to go another minute. That's good enough to buy. Let's just see what happens here. So I bought it. This is... there it is. Sorry, I'm clicking the wrong screen. I made 1%. That's not a profit. I'm going to get out at 10%. So it's fluttering a little bit, going back and forth. It's still with me. I don't worry about it coming back a bit. So here at 12%, I've made my profit for the day. It picked the stock. I knew when to get in, was to break this line. I had the market going with me. That's about all there is. I had some decent volume, and it was a great setup on the bottom chart, the 60-minute one. It's a little hard to read that one right there, but it's made us money. So I could get out now, or I could hang in. So I'm going to talk about. That's the next video we're going to make here. Is the exit rules. You have a choice, and there's a reason you give a choice. Is people can't work with somebody else's rules. They can work with their rules, but they don't like somebody else's sometimes, and that's life. So we give you 4 different ways that you can say, hey, you know, I want to get out of this thing, but I want to do it my way. So, you know, like Burger King and Starbucks, they say, hey, you know, how would you like your meal here? So I've got a few indicators turned on here, and I'm going to just quickly walk you through a couple. I'm going to turn off the SPY line just so that there's a little less clutter here. And there's this tinting here, but this stock here, this is one way to exit. I do not, you see, like it gave you this signal here, the green and the red and then the half red. If this candle completes and it goes to white, that's one of my exits. And you can do that. So I don't have an exit yet, so I'm at 13% profit. Still going my way. Made it 8%. It pulled back a little bit. I'm at 10%. I'm just going to keep moving forward. Okay, the background's gone to white. See, it came near the previous low. It went to white. That candle is not quite complete. That's what this little pie chart is up in the top corner. But that's close enough for me to exit. And now we've changed to 5-minute candles. I'm just going to change it back so you get the same view. So that's an exit, and you walked away with 4%. There's a reason why I take profit at 10%, is because this happens a lot. Is if I want to wait and see how it turns out, sometimes I give up some profit. But if I just take it, I get paid, and I get paid, and I get paid, and I love it. So what we suggest is if you think, and we tell you how you'll know that, but if you think that this thing has the potential to run a lot longer, you can keep half or a quarter of your position on the table and let it run, and then take some guaranteed profit when it's actually, you know, at the 10% mark. So here it is. We're just going to let this thing run and see how the other half went, and I'm going to talk about the other exit. So another exit is, and I'm going to now switch to 5-minute candles. We do this switch ups. It's a bit of an explanation, but is the first few minutes of the day you don't have any data, so using 5-minute candles is really tough to make a decision. So that's why we use 1, and you can have the thing automatically change how many minutes per candle. It does that for you. Takes a little getting used to, or you can just say, hey, always just show me 5s or 1 minutes or 3-minute candles, and it'll always do that. I have it set to auto because I'm used to it. So here we are. Is if I would have been in 5-minute mode the whole day, and some people trade that way, I'd still be in this move. I wouldn't have left. But the other exit is that if I cross this K band, that's these lines here, the dashed line, if I close above it, that's an exit. Or if the price pierces the other side of this K band, I'm going to hide the EMA thing, that's also an exit, but it didn't do that. So we're just going to hang on and see what happens. See, that would have been an exit, right? Let me back up. That would have been an exit also, and you would have walked away with 1% instead of 4%. See, because we don't know what the future is. This is about probabilities. It's about just going with what the market regularly does in behavior, seeing the behavior, saying, oh, that's you know, it's a good time to leave because I'm going to get paid. So if you're one that likes to hang on, because of one of the other exit rules we have, this is turning out to be a great example for that. I'm going to hide the K-band thing because you said, well, I would have left on a white or I would have left on the K-band. This is what we call the MAG line. It's the moving average genius. It does a bunch of neat stuff for you, and it auto-adjusts when you have different time scales so that it keeps you in sync with your time frames that you're looking at. So you have a consistent view. So it did not cross above this MAG line. Crossing above the MAG line is an exit. I never fight the MAG line. It's right 90% of the time. And I know people, including myself, that fought it. Says, well, you know, and we paid money. So I never fight the MAG line. So that's part of why it's here. Is just like if that thing ever crosses above that, that's an exit. I'm just moving forward in the day. So if you're willing to take a bit more risk where things might reverse up, but you're here to play for the bigger profit.
And we're at 21% right now.
Yeah, that's what this is for, and this is why it's personality. I don't like that. Great, you don't have to use it. But this is why you have all the data and all the tools and all that kind of stuff, is you can ride this thing using the mag line, and you might lose it. You know, you won't be getting the 10%. So this thing hasn't closed above the mag line, and it hasn't pierced it strongly, but it's sitting right there. So here you can see this pie chart's filling in. It didn't close, but it's getting close. Close means that the candle is completed. So like right there, this is lunchtime. The candle has completed on the wrong side of the mag line, and that's another exit style. That's 12% profit. Sometimes it turns out to be a lot more. So some people will be quite happy to say, hey, look, I still have room to play. So I'm going to move forward quickly now, and I'm going to tell you about the last kind of exit rule. Is inside this tinted area, we call that the risk zone.
The gold.
Yeah, I don't want to, I'm going to just turn off the signals because we're not using them. I'm going to turn off the time and the volume, and all you've got now is basically the risk and the mag, and I'm going to get rid of the mag line too. So now all you got is the risk zone and the candle prices. I'm just going to move forward at higher speed, and here's the time on the bottom so you get an idea. So this is almost before the day is over, and it hasn't crossed into the risk zone. And now you're going to go, well, how did you know that this stock would have been a better stock to trade on this longer view? Well, you don't know, but when we're dealing with probabilities, there's a few things we like. Is if this is below the 20-day break or a 7-day break, it has a higher chance of continuing to run red the whole day. If we go look at this stock on the daily basis, see, that's what that last candle is. That's this day. This was the previous day. And you can see that this stock had a support area here where people thought, well, you know, it's cheap, we're going to buy it, and then it bought it up here, and then people were selling it for profit. This was a surprise to people over here when the thing jumped down the other way, and then it hit this. So you can see that this is, as Scott was saying earlier about that free fall business, you know, where are people thinking it's cheap? Because the buyers were not here anymore. There were no buyers. That means you got sellers. It means the thing's probably going to be going down for a while until a flock of buyers come in and say, yeah, this thing's cheap, you know, man, you guys are idiots. It's like you're giving it away. And so they buy it. But they weren't there. And so how did we know, well, that this thing might be a good runner for a longer view? Is because this stock was already weak from a daily perspective. So the bigger picture says, no, this thing's not that great. If I turn on the signal system, see, that signal system does alerts. It doesn't say it's a guarantee. It says, you know, you might want to look at this thing for trending red. So yesterday, it says this thing might be trending red. And so that's why it's automatically, and I've got it set for that, that's why that red check mark is on there. But you've also got this red R, and it's on this list because it's got the red R in bold. That's telling us this is a really good candidate. But it's the setup, too, is I want to say that on the 60-minute chart, which is 7 days, I know it looks kind of cramped down here, this was a better candidate for going a longer run. And that's all there is to it, is like, well, so like we looked at some other ones, because this is the end of the day. Was it this one? Yeah, Solar City, I think we looked at earlier. See, it's in and out, bouncing around in the risk zone. I don't care for that. It's when it breaks it on a fresh signal, those are the best. Second best is this kind of business, but this happens during lunchtime. It's like, I don't know if I want to trade that or not. Lunchtime gets a little bit nutty. You can make some great money recently, but that's not the norm. But you know, you can have a set of rules for that and say, yeah, if it does this and does this, then I'm going to trade it. And it's easy conversations we'll have with you. So here you can see, you know, if I would have got out on the white, I would have made some good money on that thing, but you see, I wouldn't have got in on it. I didn't like that. That wasn't the best trade. If we look at TNA, which happens to be on the list, see here, it's a fresh trade. You know, it's only one candle old. This is another really great setup right here. Breaking the risk zone. It's always the same stuff we're going to talk about. Breaking the risk zone on a fresh trade means first or second candle, not the third or the fourth or whatever. Then, you know, it keeps going and going and going. And so if you would have used exit strategy number 1, now see here on the daily, this thing was sitting down near the bottom, looking at the bottom part of the chart. I'll just hide that guy. So it's near the low, right? A previous low, it broke yesterday's low. And then after it broke yesterday's low right there, it just ran down nicely. Now they don't all do that. But you see, you would have got in up here, which was a nice time to get in. It's not lunchtime. It's right after a half hour. You know, every half hour the market sometimes does a reversal. Like it often does that. It's been that way for a long time. So that's one of those, let's just wait and see until after the half hour passes. So here it is. It's a great setup, and it ran down and down. Was it the best? No, because it wasn't down here. Was it good? Yeah, it was pretty good. So this is one where you'd say, well, I could probably ride that one, especially when it's breaking the previous low. I could probably ride that one. Now TNA is high liquidity. You can buy a lot of those contracts, no problem. If we just use the system here and say, well, let's go back to 10:30-ish. Here's where it broke. I'm going to back up because it's the second candle that I want to grab. And I'm going to make sure it's in the 5-minute candles so it looks consistent. So that's the second candle. It just broke it right there, broke the put-only zone. I'm liking it. If we bring back the old buy button, I'll just tell you how you did here. So we're going to move forward in big leaps. So it's at 16%. So I would have dumped half already at least. Do I like this thing? Well, let's, you know, you can see if I look at the compare line, which is SPY in this case, that's this guy, it's showing me that the whole market's gone down nicely. SPY's heading up, which is a concern. So I might dump the whole thing, or I might wait in here. But I'd be a little bit patient because it hasn't fought me hard. I'd wait and see a little bit, but I'd certainly have taken profit at 10%. I'd be looking at seriously getting out when it gets near this previous low, because I know that that's a resistance point. It's going sideways. It's not hurting me. I'm still at 16%, 14% profit. It's not hurting me. The market is weak going up. And then, okay, that I like that. Now I'm at 25%. I would watch how it punches this line or bounces off of it. So, but now you can see up here, the 61, the market's moving strong red, like all of them, and so SPY is now running down. You don't have to look at SPY only. So here again, that's where that 8 is, the 8th candle down in the move. Often that's a point of turning around, but here it punched through. So, and it's really punching through. I'm loving it. Would I get out? I'd be certainly ready on the finger to see.
We're at 43%.
Yeah. So I'm watching it, but there's nothing ugly here yet. You know, this little green, this little green candle, it didn't go above the half of that previous candle. It's not a problem. And this is what we're going to teach for everybody. So, okay, you look at this one, you go, well, maybe, but I'm pretty deep in profit. It's still running red. The market's still red. I'm here for a long trade on this second half. I'm going to let it run. I'm into lunchtime. I don't know how it's going to turn out. I'm looking at the chart. Moving forward here quickly. It's moving down. So, anyways, I'm going to turn off the compare with SPY. We don't need that. We're going to put up the other exit rules, which are, here we go, this one. That's the mag line. Haven't even come close to the mag line. It's like, nicely below. It's nicely below the risk zone. So, and I haven't got white yet. And if I go look at the K band, which is the other style, see here that midline that's dashed? it hasn't closed above that either. See here in this middle part, it almost closed above it. So I'm going to get rid of the K-band, and we'll keep the mag up for a moment. I'm going to go forward quickly. Here we're at 1 o'clock. We're still looking nice. See here, it didn't close above the mag, but it's getting close. Okay, there it closed above. Let me just tell you how much you made or lost. Right there, 86%. Now there's a really good reason why we don't tell people to go for these long runs all the time and put all your money in them. It's because they don't happen that often. It's like 1 in 10. So let me just show you here. So this is a strong market day, and that's what that little sunshine marker tells you. So it's, you know, makes it easy. Here's the list of stocks. There's 31 of them in here. Of the stocks that ran well, this one was one of them that ran really well. IWM and FAS also ran really well. But you see, most of these other stocks, they didn't do well. This thing's on the list because it's got the possibility to do well. So you're looking at a reduced set of stocks. You're looking at a very specific direction and a specific time and conditions. But even if all that stuff comes true, that doesn't mean this thing's going to run really well in that one direction. That's why we've got to say, you got to know when to get out. What's good for you to get out? So actually looking here, oh, that's the wrong stock. I was going to say, well, why didn't it? Well, let's go back to that one. Which one was that? Don't know. But it was probably that one. No. Anyways, whatever stock that was, the rule is the same. I always use the same rule. It's like, get out. And that's why you want to have a rule. I don't have to have emotional thinkings and worries and wonders. I want to actually enjoy trading. Getting paid is awesome, but I want to enjoy the experience of trading. I don't want to be nervous and driven half crazy and you know, having a nervous tick, watching the ticks. That's what this whole system is for, and it's taken a really long time to get here because it's hard to get to that point. But we're at that point where, listen, you got like 4 ways to trade on the exit side. The entries are pretty clear, and we're going to give you like, you know, 4 or 5 different strategies. You pick the one you like, and the time period that you like, before 10 o'clock or after 10 o'clock. And they are different, but that's all you really have to choose. Is before 10 you trade one particular way, and after 10 you trade a different way. And you know, we'll tell you more about that. But the exit strategies, that's all there is. And you can come up with all kinds of new strategies and all that sort of stuff. We've got some great indicators here, like this blue star is phenomenal at telling you something. We get into that. It takes like maybe 5 to 10 minutes to tell you what to do with that thing. And how to use it. You don't have to. We've got some amazing, this Y point indicator is very fast support and resistance, and it's really accurate. You know, and so in this case here, that would have been an exit signal, and you would have made great profit. Where's the complaint about making 40% and walking away? So here, with this guy, we're looking at 86% profit, but you're going to take a few dogs. You're going to, you know, give up some profit to get these really big winners. But that's your choice. See, we put that in your control. So it's like, yeah, I want those big guys, and I don't mind having a few, you know, lose a few smaller ones and you know, miss out on, you know, a few other things to get the big babies. We'll help you do that. So here we're going to go to the end of the day and see right there. I'm going to back up. It crossed into the risk zone. I'm not waiting for the thing to crawl all the way back up to the top to find out I should have got out. I know a lot of traders. I've done a lot of coaching, and I have some coaching, counseling, therapy course behind me too, so I can actually do that side with people. So I know the human bits, and the human bits is, well, it's coming back. No, it's not. You don't know that. If it's doing this, that's time to leave, and that's why it's got to be rule-based. Is like, because you can test your rules. You can't test your emotions and what I think on the spur of the moment, but you can really test your rules and prove that it works for you. So if you would have got out here on somewhere in this range, I'm going to back up a bit, just let's just say right there, just right there, barely creeps into the risk zone, and you walked away with 71%. You know, that's a good time to leave. You would have made money. So those are the 4 exits, and those are in a video coming soon. And of course, you have that here. You can watch that. The entries are, you know, is stripped down. Let's look at what Google did today, because that was on the green side. Was there a green move? Yes, there was. Did it fit the rules? Yeah, fresh trade outside of the risk zone. That was pretty good. You know, what was the market doing at that time? Let's just take a look. We'll put on the comparison line. Well, it was going sideways to down. So this wouldn't have been the best trade, but you could have grabbed a bit of profit on that. When was the time to leave? Well, you could have used the Y points. You could have used the mag line. You could have used all kinds of stuff, and you could have got out, and you would have made a bit of profit. So Google L will be about the same. How about this one? It was like red. Well, in the risk zone, we didn't want it, but you see here's the perfect trade again. Fresh signal, leaving the risk zone. I don't like lunchtime. That's not me. But let's get rid of the SPY line for now. Great move. And you can see the mag line is right there. It says, well, you got white exit here, you've got mag line exit here, and you've got risk zone exit here. Any one of those, I'm sure there was money to be made on that one. How about this guy? Did it have a move? Yes, it did. This was a little low. I don't like it when it's that far away, but you know, it made money. TNA we looked at, and CLR we looked at. And that's it. Now, there's all these other stocks, and some of them had moves. Some of them had really good moves, like this guy here. Great move. But that wasn't on the list. Why? Because it wasn't maybe the best setup. Even though, and this is where you can expand your thing without hardly any trouble, is you can see down here on the 60, it was a perfect setup because it was below the previous low. It was a 20-day break. This thing was fabulous. And that's where in the morning you could have grabbed that thing. It was a great setup. And there's lots of them in there. But in the beginning, we try to filter down the best probable winners. But there's lots of other ones sitting here ready to go for you, and they're all marked up, and it's the same set of rules. And you've got lots of cool tools to help you. So we've got alerts, these little visual bubbles that come up. We've got audio. You can set a target price, so you say, listen, when it gets below this thing, I want to know about it, and it'll mark a price on the chart for you. Let me just show it to you in the other chart system. Okay. Anyways, we'll cover that some other day. But there's lots and lots and lots of things. Oh, I see. I turned it off. There. So there's target prices. You don't like it there. You say, well, tell me when it crosses here. And so then it says, okay, great. I'll tell you when it crosses that thing. And we've got these things here. These are awesome. These target prices, these are prices that are known before the day begins at bounce points. Look at how this thing bounced around and resisted at that target price. So amazing, great tools, and that's why it's taken years. It's like there's so much here. Anyways, that's probably more than enough for today.
Yeah, that was a good overview. Curtis, any questions?
Yeah, just a couple questions. First of all, just when it's calculating the percentage, is it to say that if let's say you have you're long a put, and say it costs you $1,000, is that to say that that 10% would be basically $100 if you were to liquidate the position if you were to sell that put?
That's right, and that includes an estimate on a good broker and good liquidity, but it does not account for if you've got bad spreads. And we tell you we have a category called live trading training that, like, when you get to that stage and you are familiar with that, is that if there's a bad spread between the bid and the ask on the contract, I'll tell you to walk away. But if it's got a good spread, good liquidity, then yeah, that's pretty accurate. And I've had people compare, their trades, and then they go back into the replay and say, well, how did I do? And it's like, yeah, that's pretty good. That was pretty close to what I paid and what I got as a percentile. And we use percentage because it's just easier for some people to figure. Because some people trade, smaller accounts, bigger accounts, and everybody can do the math on, what is 10%. Well, that's $100 on $1,000. So
that makes perfect sense.
Yeah, and it actually has time decay built into it as well. So if you have a trade that sits there all day, the value of the option decays, and the kind of options that we like to buy are they expire this Friday. If it is Friday, then we buy next Fridays for a few technical reasons. But anyways, and it's pretty close to what you'd actually get in real dollars.
So yeah, let me ask you that then too. These assumptions that you've made on the replay, first of all, are the assumptions that you're recommending people use. So are you talking about you're assuming that people are buying either weekly options or options that are set to expire, like the next expiration, the very next expiration, and then also what assumptions are you making with what delta of option that they're actually purchasing?
I've done all kinds of stuff. That's just my way of experimenting with stuff to prove things, and I've done it with real money because it helps me remember.
Yeah.
I do that. Anyways, and my memory is fantastic now on some things. So I've been right with a 10% delta and lost money, and there's the math behind all that. But the simple answer is if it's a 40% delta to about a 50% delta, that's what we like to recommend. That's a sweet spot for making dollars. And there's a bunch of other strategies for doing all kinds of weird things, but and I've tried all kinds of stuff. This 40% to 50% delta works really well with what we're doing here. We want high liquidity options. These lists of stocks that are on here have high liquidity on the options. They have volume, not open interest. I don't care about open interest. I care about what's actually traded. So if you've got low liquidity in that day on that option, it's not a trade. If it's got a bad spread, it's not a trade. If you can't get a 40 to 50, as low as 37, 35% delta, if you can't get one, it's not a trade.
Right. It's interesting because whenever I'm looking at just a simple going long an option, my typical rules that I've found have worked for me has been somewhere in the range of deltas that range between about 55 and about upwards of about 70, mm-hmm. And then to avoid time decay, kind of a rule of thumb that I would use. Now I realize this is a day trade, so it's a little different. But
yes.
If I say I would take the length of time I want to be in it, and then I would take that next expiration month, and I would add at least a few months to it. So what that would do is it takes me far enough out that I have very little time decay. That's obviously if I'm paying time decay option, then I'm playing well within the 30-day mark of expiration. But you just lose too much to time if you're too close to expiration. The only issue with going too far out is that you do increase your exposure to volatility.
I agree completely. Agree completely for swing trading. That yes, you need extra room on what your target date and price are, and definitely you deltas and time decay and all that kind of stuff. But I'll tell you what I do and I've tested it, and you don't have to agree with me. But what I do for swing trading is I sell options. I create them and I'm not a buyer of a call or a put. I'd be a net seller of a call or a put, and I look for a lower delta, and because I actually want time decay on my side, and I want the probability of the thing not succeeding to be on my time, and then you have to do all this business of adjusting it. It's a whole different way of thinking.
I agree totally. I do exactly the same thing for if I'm doing. I'm typically a credit spread trader, but
yeah.
Here we're talking really about buying calls and puts, so we're talking about long positions. So I'm just saying, if I was to do a long-term slow position, that would be sort of the way I would go. But so I'm just kind of curious as to why you've suggested the slightly lower deltas and also the close to expiration for this.
Yeah, and well, the reason is, and I'm a bit of a mathematician, so I'll spare you all the junk, but
I've got a big math degree too, so don't worry about it.
There you go. Okay, so for all the people that we'll spare them what a theta and all that means, but I've done a lot of work on modeling and looking at all that stuff, and there is a sweet spot, and there's a sweet spot for buying stocks. If you're actually buying stocks, it's not this, but for buying options, the way it works is that you're looking for an increase in a real jump in acceleration in the price in the direction that you want to go. That's beyond the norm and beyond the decay and beyond the probable outcome of the thing not succeeding. So it's got to be doing better by a bunch than what's normally going on. And so what happens is if you have a 10% delta, and this is where I say I've bought them, been right, and lost money, is it doesn't work. If you want to do a 90% delta using the other side, where you've got a lot of money on the table, that can work fairly well, but you've got a lot of money at risk for essentially the same rate of return, dollars, return. So I like the lower risk, less money on the table for an equivalent reward. And so when a stock crosses from a delta of about 40 something into 50 and 50 plus, you really start to see a real bang in what your option is worth. Like it jumps up in value much nicer, even though the delta is good on the other stock. I also find that the liquidity on some of the other higher deltas isn't there. Unless you get into some specific stocks where it doesn't matter what you're buying, it's like there's lots of liquidity. But for near the money, for the strike price on the option, you get some really good liquidity, even on mediocre liquidity stock option, like stocks that normally don't have great liquidity. Like they're all right, but at the money, there's a bit more action in that day than the ones that are further out.
Yeah, they tend to be a little more expensive as well, but the ones at the money. Are you talking about that the gamma? If you look at the gamma curves, that you get the greatest acceleration by looking at the 40% delta?
Yeah, that's right. Yeah, because the theta is not really affected by all that, but all of a sudden it's like, whoa, this thing's taken off.
Gotcha. Yeah, that makes sense. So what about the theta decay being now? What's the reasoning behind selling close to expiration, buying an option close to expiration versus maybe one that's a little farther out to mitigate any theta decay through the day?
Yeah, I don't care I don't care about theta on a day. It just doesn't matter because really the money has to be.
Okay, I thought you had said it there.
The money has to be in the slope, and that's actually one of the things about the slope line here on the mag. You can see there's this little dashed area up here and dashed area here and dashed. Those mean that that's really not the place I want to be. And you can change that to be invisible or heavy or whatever you want. But I have it there. That's just a reminder that time is making more money than I am right now, because I need to have a fantastic slope to make fantastic money. If I've got mediocre slope, or in this case negative slope, on this one part of this chart right there, I'm probably losing money on two different scales. One is the time decay, but also that the price is going the wrong way. And that's just a reminder that that would not be an entry signal in any way. But whereas here I've got slope, that's an entry that tells me that, yeah, this thing's going to, I'm not saying it will be great, but that's a great candidate for a good move. That I want the slope because of exactly what you're talking about is time decay, this thing's expiring. I'm looking for a short burst of money. That's the only thing we're doing in day trading. I want a powerful hit. And it's, some people don't give a darn. They say, well, this is 50 cents. Yeah, 50 cents for an option is a big deal because you're not putting up, in this case, $2,800. You're putting up like $300 or $500. And you're getting a big benefit of, you see a 10% return on your $500. That's $50. You're not going to get $50 out of this stock all day. If you bought the options, your rate of return is pretty low on the options. I mean, on the stocks. But on the options, this is like awesome rate of return. And so for day trading, I want to see that big hit, quick, fast, in, out, gone. Or it's going to be a long trade, again, big money with an option. And the theta doesn't matter because what happens, if I held the thing all day, it's not going to make too much of a difference. But one of the things in the experiencing of trading is if I would have bought, this is a bad trade, okay, is if I would have bought the put here and then if I go try to sell it here, it's actually worth less here than when I bought it here. I have to actually break even down here. That's the thing about day trading is with near options is if you're holding on for a long time, it's not a good idea, and that's why 10% in 10 minutes is the goal, because that's very doable if you pick the right stock.
So that's Alan. So why, if that's a concern, and you think that you would maybe want to have the option to be able to hold it longer through the day, and why wouldn't you pick a option that has a further out expiration?
Yeah, you could do that, definitely. But if my focus is not the longer trades, my focus is get paid, get paid, get paid, and I'll take a lot of 10% profits. Well, that's good. I'm really happy with that. The probabilities of getting these longer trades is lower, and so to get the the 80% trades, they happen every day. But that's a different thinking. And yes, you'd have to put more money on the table. You'd have to buy an option further out if you wanted to, and that's a conversation of details. Of like if you buy one that's 2 weeks out or 3 weeks out, because you may not have a weekly that is next week as well as every 1 week. You may have to buy one that's 3 weeks out from now. You're putting more money on the table, and you're making about the same profit. So because the $500. Let's say you make $500 in profit. Well, if I have to put up $800 to make $500, that's really good. But if I have to put up $2,000 to make $500, that's a lower rate of return.
Right, because they're more expensive further out. That makes sense.
Yeah, that's right. I'm putting more money on the table. Now, it would actually be, and this is the fine detail. So if I put up $2,000, I might make $600. Because that's built into the formula for what an option is worth and the probability of it, going further and da-da-da-da. So if I'm making, in that case, I made, a 30% return, which is great, but it's still $600. Well, I might have made $500 on an $800. Well, that's, that's a better rate of return. That's like a 60% profit, and I had less money at risk.
Okay, that totally makes sense. So the other question on that is, have you ever found any big? Have you ever been burnt on big changes in implied volatility in this strategy, or is it just too short a time frame to worry about?
It's short, but implied volatility. I have been in places where it's happened twice, where the market reversed strongly, and I didn't have a stop already. And I learned that lesson a couple of years back, that it's like, you know what, after I get into a trade, I'm already placing my sell order. And the second time
Yes.
it happened, I was in the process of placing my sell order, but the whip around happened so fast that I didn't even hit it, and I was like brain struck, like, what do I do? Is this thing coming back? And anyways, this is all part of the stuff that's in the live trading, is because this is reality. It's like I know exactly what I'd do next time if that ever happens again. I will just go hit market order, boom, gone, out, instantly.
Yeah.
I'm taking a loss, but it's so rare that that happens because the kinds of the stocks and the setups and the way these things are looking, I'm looking for the market is agreeing with my direction. You know, this is a short time frame. This is the now thing. But, you know, down here, you know, how was the market looking? Well, on the comparison, you know, that line there, if I get rid of the other stuff, the market was heading generally down all day, and you can see the market started moving back up. Well, this is SPY I use. But the, you know, it was generally going my way. I don't have to worry about a reversal. But, you know, like in the case of somebody does a tweet that the White House is, you know, under attack, the market does react, and that was one of the times I got burnt. And very, very rare. And of course,
Yeah, it's very.
they're out there, the tech guys have fixed that so that particular problem is really not likely to happen again. But, you know, I already know what to do. In those rare situations, you take a hit, and this is also risk management. We talk about that too. It's like, let's say something really does go bad. I would not have my whole account on the line. I would have a piece of it. And so my friend, the really good Forex trader who's switching up to being a day trader of options, he's got the risk management. He knows. I don't have to teach him. He would put at most 25% of his account in a trade, and he'll take a profit or loss of, in that case, 10%. And he'll have his stops in place, and he'll have all that kind of stuff. And so the majority of the time, he's making money. He's got an 80%, and that's what that strategy is that we've got as videos. That's exactly what he does. He helped me make that video, actually. It's like, no, I do this too. Okay, great. We'll stick that in there. But he makes 30% per month, and you go, well, I thought he's making 10% a day. Yeah, but he only puts up a piece of his account. So every day, he's either making 2% or nothing of his whole account. So he'll make 15 good, profitable trades in a month. 15. And that takes him to a 30% profit per month. Well, that's, you know, he's going to have some big money sitting in his account. He can easily live on that and grow it. So he's very excited. He'll be, as he says, job free.
Awesome.
Not independently wealthy yet. He'll be job free in about a year from now. Where it's like, I don't need the job. He may still go to collect the extra income, but, you know, after a while, it's kind of like, fire him if you want.
That's funny. Yeah. I know.
It's a great way to live.
Yeah, that is. It's funny. You know, just having traded futures and some of the things you see with movements. My stops and targets go in the second that my orders go in. So I'm never ever left kind of out there exposed for even a second. And the only thing as I found is, with the interactive brokers, you can't actually. When I had Options Express at one time, you can actually put in a stop and a target based on the price of the underlying, which was great. But in interactive brokers, you can't do that. So what you have to do is put in I figured a workaround though. You have to put in an alert, and then the alert triggers an order.
Yeah.
So it's a little workaround.
One of the fellows that I know quite well, he does a bracket trade, which means that he puts his buy with a profit, a loss, and it all gets tossed in at the one go. I don't like it that way.
That's what I do.
Yeah, it takes for me too long to set it up. I mean, we're talking 20 seconds, big deal. But you know, when I like a stock, I'm already there with my. I'm getting ready to place the buy order, and as soon as I like it, then I just hit the buy button because it's already, you know, ready to go, and then right after it gets filled, I set up my take profit and my stop loss order, and I punch that in right then too.
Yeah, that makes sense to do it. That's the way you have to do it here by the sounds of it. So.
Yeah, because then, well, the difference is that's how I know how many contracts I actually got filled on at my price, and so I may cancel the other stuff because, you know, it's like that thing will never get filled. You know, the things move too far or whatever it is, and so both work really well. But that's why I got clipped on that one rare item, is because got filled, and then it's like what? And so, but again, that's, you know, I'm grateful that these things happen, because it's only going to happen once. And if people watch the training videos that we're going to put together for all of them, it's like you don't have to ever have this stuff happen. It's like, this is what you do, because I've already paid that price. You don't have to.
Well, Alan, I think this probably is good for a day. I've been here a few hours, so this is perfect. This will get me. This will get me up and running. Let me get familiar with it now that I have it working, and this is great. And then I can provide. You know, I'm going to keep notes as I go through it, and we can talk again, and yeah, that'll be good.
Yeah, just shoot us an email. You've got our email, so just shoot us an email if you got any questions, and you know, we'll just reply back, and we're happy to do more webinars. You know, we want to get this information out to people because we've already proven that it works. So, you know, it's time to do the marketing thing.
Right.
Because our goal.
I mean,
I know Scott.
I can as I go through the videos here and what you've got, I can see what maybe in my mind makes logical sense in terms of maybe what needs to be filled in terms of videos and all that sort of thing.
That'd be awesome. Yeah, we'd love to hear that.
Yeah. Awesome. Thank you very much.
You're welcome. Well, and just Scott knows this about the kind of people that Scott and I are, is that we're really interested in helping other people become free of their day jobs and, you know, all that kind of stuff. We're free spirits in the sense of, like, we like to enjoy the planet, but we also want to help other people do that. That's really our mission. And you know, we don't charge hardly anything for what we do in the way of services for the value that it is. We just really, so there is a community being built here. We've already got a few people. We've got you know, we've got one trainer that's awesome, and we got another trainer that's in the works, and we just really just want to help a lot of people become successful. And so. Yeah, your feedback, that just goes into making everything, you know, better for everybody else and the next guy. So thank you.
This is going to sound like a funny question, but how do I shut down Wall Street Genius?
How does what?
Oh, I see. Okay, is there a logout button for when you shut down Wall Street Genius?
Oh, if you want to close the replay, all you got to do is close the main list, or close that little time controller date picker window. If you hit the little X on that one disappears. Yeah, it'll cool. Shut down the whole thing, and it remembers your settings and where you put things, and so when you start up the next time, it's like, yep, I'm ready, just the way you like it.
Awesome. Perfect.
Okay, hey, well, thanks for your time, and Scott.
Well, thank you for your time.
Back to you.
Yeah, that was really well put together, Alan. Thanks for sharing all that. And Curtis, appreciate all the questions that you had as well. And yeah, as you're when you begin using it to trade, let us know how you're doing too. Okay.
Yeah, I just need a little bit, obviously a little bit of time just to get comfortable with it and figure out what button does what and all that sort of thing. So this is perfect.
Great. All right. Well, thanks for joining us, everyone. We'll see you next time. Bye-bye.